Welcome to the Moore Realtors Weekly St. Louis Real Estate Market Update. I'm Dennis Norman, one of the brokers at Moore, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Let's jump right into some real estate news. Here are just a few of the headlines from St. Louis's best local source of real estate news and real estate information, stlouisrealestatenews.com. Headlines included this week our weekly St. Louis mortgage rate update from Rob Fischel, a local mortgage banker who also discusses should you rent or buy a home in this market. Good stuff. An article about new home sales falling again in December and making 2011 unfortunately the worst year in history for new home sales. Some good news, St. Louis foreclosures continue to decline. And finally, an article discussing that 1 in 5 home sales is a foreclosure and selling for only 2/3 the cost of a non-foreclosure home. So this shows you just how much of an impact foreclosures have on the market. Now let's jump in with some market data. The next few slides are data based upon for the whole St. Louis MSA, so the entire St. Louis metro area, including some counties on the east side of the Mississippi as well. This is our real-time market data and our market profile. You won't find this anywhere else in St. Louis. Here's just some of the highlights. Now, this is based upon market activity, what's on the market, not sales prices. So median price of homes listed in the metro area, $175,000. You can see the most expensive one there, kind of a fun fact, $7.2 million. Median asking price per foot across the metro area, $96 a foot, and the average days on the market, about 198 days on the market, quite a chunk of time. I'm going to jump down here, though, to our market action index, our trademark market action index, and it's a 17. Been at 17 for a while. And as I go into the next slide here that shows you a graph showing what the market action index has been since its inception back in 2009, you can see where it's about as high as it's been, which is good. Quick reminder here, this looks at supply and demand and the balance of the market between those. And so a 30, if the index came out to a 30, that would indicate that the market's perfectly balanced, not favoring buyers or sellers, very healthy, good market. We haven't seen that since 2009, since its inception. As it goes above 30 up to a maximum of 60, the higher it goes, the hotter the market is, the more it favors sellers. So back in 06, if we'd had this index, we probably would have been looking at a 55 or something way up there. As it goes below a 30 down to a low of 0, the lower it goes, the colder the market is, and the more it favors buyers. So we can see here, we're still well down in that frigid zone, but we're moving up a little bit. And again, this is for the whole St. Louis metro area. We can show you this data and charts for your specific area, for your county, for your city, however you want to look at it, or your zip code. And it's a great indicator because real estate is local. And as you look around the St. Louis area, I look at these charts a lot. And as I prepare them for some clients and helping agents prepare them for clients that are thinking of selling or buying, or investors that just want to get their arms around the market, you can see there's some big differences in even adjoining cities here in St. Louis, and the market action index is one quick snapshot that might clue you into a market that is doing better or worse than another. So that's something we can help you with. Here is I just break down the market action index into price ranges by fourth. So the fourth most expensive homes down to the fourth least expensive homes, and typically we can see this is in reverse order. The way the market's performed, or the market action index, has consistently been best for the lowest price homes, which is the blue line up here, followed by the next tier, the 25 to 50%, followed by the next, and then finally the 25% of the most expensive homes the black line has been on bottom. But we can see here of late, everything's on the rise, but the top 25% market, the most expensive homes market, has really jumped up here, and so now all these three quartiles have come together around the 14 mark. So the lowest 25% of the homes, or the priced homes in the market, are still performing the best, but we can see things are really improving at all price points. This, again, for the St. Louis MSA, just shows us a price trend, a median price trend over the past year, and you can see what it's done. Dipped, started about 176, dipped about almost 172, up to a high of almost 185, and then has steadily been heading downward to around the 177 mark. The black line shows a 7-day average, so it's quicker to show changes and reactions in the market, and it's definitely seems to be trending downward. Now I'm going to zoom into what I call the core market. This is the area, the St. Louis market, where the bulk of the transactions are on the Missouri side of the river, which is where we focus. And the data I'm going to show you now is based upon, comprised of 5 counties: St. Louis City, St. Louis County, St. Charles, Jefferson, and Franklin County. So this is data for those counties. And again, we can prepare some data like this to help whether you're buying or selling, or you're an investor and you want to get your arms around the market. We can do this for any area, but this is for this 5-county area combined to give us an overview. And we can see the blue columns represent the number of sales, green line average sales price in this 5-county area. We can see number of sales pretty well balanced out at the end of the year. The last quarter, pretty consistently, just a little over 2,000 homes a month. January, we won't know yet, as I mentioned before. Sales data lags behind the closing, so it'll be a little bit before we, after January's over, before we see final numbers for January. And we can see average sales prices are doing what we saw in the prior chart. They're trending downward. We're down, looks like it's pointing down toward about that 130 mark here as of January. This next slide is based on, this shows median home sales prices, so a little more accurate indicator of the market, as well as the median number of days to sell. Yellow line being prices. We can see what they've done over the past year. They did peak in the summer up here maybe in the 130 range, and then flattened off. The last quarter, spent the bulk of the quarter at about the 112, 113 range, something like that. Now, it's showing a pretty sharp decline in January. Again, January's data is not complete yet, so we'll see what happens, but so far it's not looking encouraging for prices in January. Days on market also flattened out here at around 80 days. They're slightly on the rise in January, taking a little longer to sell homes. Now comes what I call my Realtor scorecard. This is a chart that shows the ratio between what homes have sold for versus what they were listed for, both at the time of the sale and then also going back to when they were originally listed, what price or how the sales price compares to the original list price. Because in a market like this, where the market is favoring buyers and prices are continuing to decline, it is absolutely imperative for sellers that they know what their homes are worth and what they should be priced at coming out of the gate. Because time is not your friend, not at all. And so this is where it's really, the onus is on the real estate agent or broker to know the market, to have the tools and resources available to them so that they know the market and then know how to interpret this data and share it with you as a seller, and also give you the backup so that you're confident that the data and the information they're giving you is accurate, so that you can make an informed decision. And again, this is where at More Realtors we pride ourselves on this. This is one of our strong suits. We spend a lot of time in the data, we spend a lot of time in the market, and we spend a lot of time educating ourselves and our agents and training so that we can properly price things. Because you can see what's happening here. The red line shows the ratio of final sales prices to original list price. And basically, homes have been selling for about 90% of what they were originally listed for. The peak they've hit in the summer is a little over 92, but basically here lately about 90%. So that's a pretty significant cut. So homes, have been overpriced by at least 10%, and that's significant, especially if we were working with you one-on-one. We'd show you charts to show you. We've done this before with some sellers. We can show what's happened when they came out on the market overpriced. It's pretty dramatic. When you see a chart and you see, well, okay, you listed your house 8 months ago, and you see the market data, and you realize that, okay, I was overpriced 8 months ago, but unfortunately, the price today in my area has dropped some more. So now, unfortunately, you're even more overpriced. So even what was the right price 8 months ago may not be. So again, it's critical to come out right. We can see eventually prices are getting down, closer to where they should be. This yellow line represents the ratio of the home price, the selling price, to what it was listed for at the time of sale. So after it sits on the market, prices get reduced. They're eventually selling for about 96% of what they're currently listed for. This is just a long-term look at home prices in St. Louis in this 5-county area. This is a 10-year look back. The blue line represents median list prices over this 10-year period. Green line represents median sales prices. We can see the gaps growing back here. So again, we probably have a lot of mispriced listings out there. But you can see basically we're really down below where we were about 10 years ago on pricing. And I'm going to jump ahead here. This is not a pretty table. I didn't really spend time formatting it, but this is the raw data behind this chart. And it's a little easier to see. In 2002, the median sales price in the St. Louis 5-county area was $127,500. We can see for 2011 it was $118,100. So a fairly significant drop there over that 10-year period. So we are really behind 2002. Now again, there are markets in St. Louis where it's not quite like this, where it's different, but that's where again it's critical to get the data for your market. Okay, and again that was just a quick overview of the market and a sampling of some of the tools and resources we have available for you if you're a home seller or buyer or an investor. And you see our leadership team there, myself, my partner John Williams, our newest partner and member of the leadership team, Nick Seapack. Between the three of us, we have about 100 years experience in the real estate business, and see, we're not even that old. And we have agents. We're continuing to add agents to our company, and it's continuing to grow. And we do a ton of training. I think we have the best team of professionals in St. Louis. We have a lot of data available. Up here in the upper right-hand corner, you can see an electronic newsletter. It comes out once a month. That it's not one of these canned deals. It's something we create. It's all about St. Louis. It's all about St. Louis market, filled with some market data, some helpful information, news, things like that. I'd suggest you may want to subscribe to that. You can do that on stlouisrealestatenews.com in the upper right-hand corner. There's a place to subscribe. And also on the next screen, if you'll bear with me, I'm going to give you a QR code that'll take you to a lot of resources. Over here on the left's a chart. Just again, we can chart out data of all kinds to really help you understand your market or the market you're looking in. This video update that I do weekly is available on iTunes as a podcast. You can go to the iTunes store, search St. Louis Real Estate Market Update, look for this arch, and you can subscribe to it. You can catch it on our YouTube channel, Facebook channel, our Facebook page, facebook.com/more-realtors. Finally, couple other things, don't hang up yet. QR codes here, if you'll scan these. The one on the left will take you to a web page where we've got a lot of resources available for buyers and sellers. Of course, all this stuff is free. We're just looking to do business with you and to help you. On the right is something else that's interesting. I did a forecast market video. A video forecast of where I think the real estate business in St. Louis is going, a real estate market in 2012, and my predictions. What are they worth? Well, I don't know. Got 32 years experience here, and I spent a lot of time crunching the data. And I think it's a pretty good look or a pretty accurate look at probably what's in store. And so you can get that by scanning that QR code. Here's some legal disclaimers you can read at your leisure, and that's it. I'm going to go back to these QR codes for a second here so you can scan those. And again, I would invite you to contact us to let us help you with your whatever your real estate needs are, and let us show you what it's like to work with a true professional in the industry and somebody that again has the tools, the resources, and the knowledge to really guide you as a professional. Like your CPA does, or like your attorney does, or your doctor. That's really the level of professionalism that we demand in our within our company. So, invite you to contact us. You can also get a lot more resources from our website at mo-re.com. That's mo-re.com. And until next week, have a great week, and God bless you and your family.